U.S. regulators have intensified their efforts to target major crypto exchanges and designate several prominent altcoins as securities, which has created a scarlet letter effect in the crypto industry. However, despite these challenges, the resilience of the crypto market is evident. Bitcoin opens the Asia trading week with a 0.4% increase, reaching $25,912, while other cryptocurrencies experience slight declines, with one trading at $1,748. The liquidity situation has significantly deteriorated, exacerbated by the departure of institutional investors, particularly US-based market makers who anticipate scrutiny from the SEC. These observations were highlighted by Johnny Tang, a senior researcher at L-Bank Labs, in a note to CoinDesk. Despite the S&P 500 reaching new monthly highs, the crypto market continues to face challenges. In today's video, we have Cathie discussing the future of innovation, her perspective on US inflation, and more.
Many people are wondering about the true health of this market. Now, we think the resolution is going to be, and we're beginning to see it, as you say, in some of the less than mega cap tech stocks. We think the resolution is that the rest of the market will catch up if we're right on this notion that the big surprise, probably the biggest surprise out there for the second half of this year is deflation. The problem now is we had a crisis, a regional bank crisis at the end of the first quarter. A crisis always, or during a crisis, people pull back saying, wait a minute, what's going on here? Especially when it involves the banking system.
Yes.
So
a financial crisis, not a weather crisis.
Exactly.
Right.
So second quarter, it looks like M2 will be down 5% year over year. And velocity, if we want to get the consensus nominal GDP numbers, 5 to 6%, velocity will have to be up 10 to 11%. It's not going to be. So I think that's why we're seeing some breaks here in pricing. I think that what is giving way is pricing, because the consumer has been saying, no mas, we're trading down, we are not. So I think that the margin pressure that we're going to see here is going to be serious, and an antidote to that is technology, AI, productivity gains. So I think innovation solves problems. I think that's another reason our stocks are doing.
Joe DiPasquale from Both Capital highlighted that Bitcoin's support at $25,000 is still holding relatively well. However, the release of new Federal Open Market Committee minutes in the near future could potentially impact this stability. Market participants should closely monitor regulatory indications and decisions made by exchanges like Binance and Coinbase. Economist Peter Schiff has expressed concerns about the insolvency of the U.S. banking system, attributing it to the Federal Reserve's actions. Schiff pointed out the near-zero interest rates at banks, contrasting them with the 5.25% Fed funds rate and the significantly higher real inflation rate. Schiff has previously warned about the imminent collapse of the U.S. banking system, drawing parallels to the larger collapse experienced in 2008.
When I say of some sorts, is this hard landing pricing? Because innovation, innovation is deflationary, right?
Yeah.
And you look at what Elon's doing. You look at what Elon's doing. Everybody thinks Elon is cutting prices because demand has fallen off. And it may very well. But he can afford to cut prices because his margins are so much higher than all of the other auto companies out there. And he has always said he would. He would drive prices down in line with cost declines. Now, maybe a little bit more now because margins have come in. But this is the history of innovation. So it's very interesting. The bears in February of 21 basically said, this is nothing but a replay of the tech and telecom bubble. And they drew a chart from that point of the tech and telecom bust. And they said, this is where they are going to go.
I think I might have done that.
You might have done it. And that's what makes a market. And if you shorted us, you did very well. In fact, I think still 20% of ARKK is short. And so we actually declined more than the NASDAQ during the bust. Now, what's fascinating about that is we look at the period from 1980 through the tech and telecom bubble as the period when the seeds for all of the 5 platforms that I mentioned earlier, they were planted back then.
Robert Kiyosaki, the author of Rich Dad Poor Dad, has issued a warning about an impending real estate market crash that he believes will surpass the magnitude of the 2008 financial crisis. According to him, the upcoming crash in 2023 will be the greatest one ever witnessed, far overshadowing the global financial crisis of 2008. Kiyosaki advises investors to safeguard themselves by acquiring assets such as gold, silver, and Bitcoin. In a recent tweet, he emphasized the severity of the situation, citing a 70% decline in the value of office towers in San Francisco since 2019. Kiyosaki has long been a proponent of gold, silver, and Bitcoin, and he previously predicted that by 2025, the price of gold would reach $5,000, silver would surge to $500, and Bitcoin would skyrocket to $500,000. He attributes these forecasts to his belief that faith in the US dollar, which he considers to be fake money, will diminish, leading to the rise of alternative forms of currency like gold, silver, and Bitcoin, which he refers to as real money and people's money.
There was too much capital. I mean, the internet just captured the imagination, like ChatGPT is doing right now. The internet captured the imagination, and analysts started valuing companies on the number of eyeballs they might get in 10 years' time. Something crazy like that. Too much capital chasing too few opportunities too soon. Why? The cloud didn't even happen until 2006, AWS. The first big breakthrough in in AI, deep learning, did not happen until 2012.
Right.
The second big one, transformer technology, natural language processing, which is ChatGPT, which is why we're going to see autonomous driving. That did not happen until 2018. Now we're ready for prime time. What's fascinating, this is going to go down in history, I believe, as a behavioral study, an investment behavioral study to beat all investment behavioral studies. They rushed in the 90s. That ended badly. A lot of the portfolio managers today were young men, and they have that muscle memory, and they remember how maybe their bosses were thrown out or whatever. I've been here before.
I remember. It's my formative memory.
Exactly. The last time I heard that expression, exponential growth trajectories, was back then. It ended badly. What are they doing now? We are in a very bearish moment for the market generally. If you look at cash on the sidelines, if you look at how hedge funds are positioned, no one's optimistic. And so our bet, and consider the source, our bet is staying away from these stocks now is going to end badly, and sticking with the benchmark. So they're running for their benchmarks because they think that's where safety lies. The benchmarks are what's going to be disrupted by this massive convergence of innovation platforms.
Is now a favorable moment to invest in Bitcoin? Share your thoughts on Bitcoin's future in 2023 by leaving a comment in the section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.